Hi guys, welcome back to Tax Q&A. As we enter the tax filing season, we have been getting a lot of questions related to ITR filing this year. We covered quite a few of them in the last video, and in this one, our team has compiled questions specific to stock market investors and traders. So if you're a long-term investor or a F&O trader, this video will address all the questions you might have. Let's get started. Kirtan says, the capital gains rates were changed during budget last year. How will this impact my stock market profits from now on, and how to report them? Okay, the taxation of capital assets was changed during the budget last year, and the new rates for capital gains are effective from 23rd July 2024 onwards. Now, how does this affect us? Effectively, this means we have two different tax rates to follow this year. If you sold stocks before 23rd July 2024, the old rates apply. That is 15% for short-term and 10% on long-term capital gains. While stocks sold on or after 23rd July will get taxed at higher rates of 20% and 12.5%. Now, when it comes to reporting your capital gains, that's also changed a bit this year. First of all, you will have to mention the date of sale of asset because that will determine your tax rate. And secondly, if you just have long-term gains up to 1.25 lakh under section 112A, you can simply file ITR 1 or ITR 4 now. You will find a separate section called income on which no tax is payable in the ITR form. That's where you have to add these details. But if your LTCG exceeds 1.25 lakh or you have some short-term gains, you still need to file ITR 2 and report the details under scheduled capital gains. Dhruvi asks, are intraday and F&O profits taxed differently? Because one is speculative while the other is non-spec. And where to mention them in the ITR? So yes, you're right. Intraday trading is treated as speculative income while F&O trading is considered non-spec income. But when it comes to taxation, both still fall under the head income from business and profession and hence will be taxed at your slab rate. So say you have 10 lakh salary income, 2 lakh F&O profits and 50k in intraday profits. Your total income will be 12.5 lakh. And then this amount will be taxed according to the income tax slabs. You can check the tax slabs under both old and new regimes for this year on your screen. The only difference is in how you carry forward losses. Speculative losses like those from intraday can be carried forward for 4 years and set off only against speculative gains. While non-speculative losses like those from F&O can be carried forward for 8 years and set off against any income other than salary in the same year. Finally, you would need to file ITR 3 to report F&O or intraday income under the head profits and gains from business or profession. Siddharth is asking, the LTCG exemption was increased to 1.25 lakh, but I booked profits before the budget date. So will I get 1 lakh exemption or 1.25 lakh? I think we are confusing two different things here. While the calculation of tax will vary depending on your sell date, the LTCG exemption does not change. It remains the same at 1.25 lakh, which applies to your total long-term capital gains for the whole financial year, no matter when you book the profits. So even if you sold some shares before the budget date, you will still get the revised 1.25 lakh exemption on your long-term gains. For example, you made 1 lakh LTCG before budget and another 2 lakh after budget. Hence your total gain is 3 lakh. Now 1.25 lakh exemption will first get deducted from the 2 lakh gains made after budget because those are taxed at the higher rate of 12.5%. The remaining 75k will be taxed at 12.5% and those 1 lakh gains made before budget will be taxable at 10%. So your net tax payable after accounting for the exemption will come at 19,375. Ria wants to know, can I get Chapter 6A deductions against my capital gains? No, you can't claim Chapter 6A deductions like ATC or ATD against your long-term or short-term capital gains. These deductions are only allowed against incomes taxed at slab rates, for example salary, rental income or your intraday and F&O profits. Prajwal says, I read that buyback profits are taxed differently this year onwards. How does that work now? Until now, income from share buybacks was completely tax-free in the hands of investors. But from 1st October 2024, buyback profits are treated as deemed dividends and hence taxed at applicable slab rate under the head income from other sources. One important thing to note here is that your entire buyback proceeds will be taxed and not just the profit amount. Say you bought shares worth 100 rupees and got back 140 after the buyback, then the entire 140 will be taxable. However, you can report the cost of acquisition of shares sold during the buyback as a capital loss while filing your ITR, which is 100 in our example. And this loss can then be offset against other gains or carried forward for up to 8 years. Neer is saying, I'm a full-time stock market trader. Can I treat my capital gains as business income? See, this totally depends on your intent. If trading is your primary occupation and you buy and sell shares frequently for profit, you should report your profits as business income. However, if you mainly depend on say salary income and do trading on the side, it's usually better to treat them as capital gains. But whatever you decide, you should not change how you report your profits every now and then. It's important to stay consistent in your ITRs every year or you might get a scrutiny notice. Arpita is asking, I have brought forward long-term capital losses from previous years and I have earned short-term capital gains this year. Is it allowed to set them off? No, you can't. There are clear rules about offsetting losses defined by the tax department, which say long-term capital loss can be only adjusted against long-term capital gains, whether in the same year or future years, while short-term capital loss can be adjusted against both short-term and long-term gains. Since your gains this year are short-term, you will have to carry forward your long-term losses and wait to set them off in future years. Dhruv says, I have capital gains from stocks of around 5 lakh. Can I claim the 12 lakh tax rebate? If yes, there's no need to file ITR, right? So first of all, for this year, the rebate is applicable only till income up to 7 lakh and not 12 lakh. So 12 lakh limit will apply for ITRs filed next year. Now talking about the rebate under section 87A, it is not allowed against incomes taxed at special rates like capital gains from stocks or mutual funds. But if you have F&O or intraday income, which are taxed at slab rates, you would be able to claim the rebate on that part of your income. Lastly, if your final tax payable becomes nil after deductions or rebate, you still need to file your ITR if your total income is above the basic exemption limit. Gia is asking, as a trader, what can I claim as expenses? Like any other business, traders are also allowed to claim expenses related to their trading activity since it counts as business income. These include charges directly linked to trading like brokerage, STT, stamp duty, etc. And then there are other things like trading courses, subscription of tools, internet and mobile bills, depreciation on the laptop purchase for trading, and rental expenses if you lease out a separate space. You can even deduct interest paid on loans taken for trading and fees paid to a CA for audits or tax filing. Just remember, all of these expenses should be strictly associated with your trading business. Mihir asks, do I need an audit to carry forward my trading losses? It's a common misconception that you need an audit just to carry forward trading losses. But see, audit applicability depends only on one thing, your turnover. Now usually, businesses with a turnover of more than 1 crore need to do a tax audit. But this limit extends to 10 crores if more than 95% of business transactions are cashless, which is exactly the case in securities trading. Hence, if your trading turnover exceeds 10 crore, you will have to get your books of accounts audited by a practicing CA along with filing your ITR. For intraday and F&O trading, turnover is calculated as the sum total of the absolute values of profit and losses. Simply put, just add all the profits and losses from all of your trades without considering the negative sign. For instance, you made 3 F&O trades. First with a 1.5 lakh profit, next one with a 2 lakh loss, and third one made you 50k in profits. So the turnover here would be 4 lakh. Remember that the ITR filing deadline shifts to 31st October if an audit is needed. Nitya has asked, for an individual trader engaged in daily options or intraday trading, is it compulsory to maintain books of accounts or end of year reports from brokers are enough? Yes, you need to maintain books of accounts if your annual trading profit is more than 2.5 lakh or your trading turnover is over 25 lakh. Now, books of accounts for any business simply means financial statements like the P&L statement, balance sheet, cash books, journals, and ledgers. Usually, your stockbroker gives you documents such as the tax P&L report, trade books, order history, and holding statements. These documents, along with your bank statements and expense bills, will help you create the books of accounts, which will then help you fill in the details of your income, expenses, and assets accurately in the ITR. Om says, what documents do I need to upload when filing my ITR for stock transactions? Where can I get them? No, you don't need to upload any document while filing your ITR. Documents are there so we can calculate and report our profits and taxes accurately. First of all, you should get P&L and tax P&L reports from your broker. These contain details of all the transactions you have done throughout the year, including mutual funds, delivery trades, intraday, and F&O. Then there's AIS, or the Annual Information Statement. It shows all your financial transactions for the year like interest income, dividends, stock and mutual fund transactions, and foreign remittances. You can get it from the income tax portal. Apart from these, you might need more documents depending on your income sources. So you can check out this tax Q&A post to get a detailed list. The link is in the description. And with that, it's a wrap. If Google search is too much work for you, Quora is full of opinions, and ChatGPT is not accurate enough, then you should check out Tax Q&A, where you can toss questions and our tax experts give quality answers. And hey, don't forget to like and subscribe so you do not miss out on what's coming next. See you in the next one.